Okay, let's get into this. If you're running a restaurant now, 2024, looking at 2025, well, the big picture numbers look good, right? Industry sales projected over $1 trillion nationally.
Yeah, huge numbers. But the sources we've been looking at, they show a different story on the ground for, individual owners. It's tougher than those headlines suggest.
Right, that's the paradox. So some places doing okay, but these sources, they show nearly, 40% of all U.S. restaurants actually saw sales drop last year. Traffic down in some key areas too.
Exactly. It's definitely not smooth sailing across the board. Far from it.
So our mission here today is really to break down those core financial pressures, the real pain points operators are feeling, and then look at, what financing solutions actually work. The practical stuff, working capital, credit lines, buying equipment.
And the pressures are clear from the data. I mean, operational costs just keep going up. Something like 88% of operators said labor costs rose in 2024.
88%.
Wow. Yeah, and they expect that to continue. Then there's food costs, another big one. 87% reported a jump there. Some saw a 34% increase year over year.
34%?
And average food prices still sitting about 25% higher than before the pandemic.
25%.
Wow.
That's just massive pressure on your menu pricing, on your already thin margins.
Yeah.
And staffing, that's not getting easier either, I gather.
No, not at all. Still the number one challenge for almost a third of operators. We're seeing 70% have jobs open they just can't fill. And high turnover just makes the labor cost problem worse, especially for full service restaurants.
Okay, so you've got costs climbing. It's hard to find and keep good people. Competition's intense. And customers, they want everything valued, delivery convenience, unique experiences. Reading these sources, it feels like restaurants are just constantly having to, adapt
and invest. That's really key here. That adaptation costs money. Think about technology. It's not just nice to have anymore.
Right.
It's becoming essential for efficiency, maybe even cutting costs down the line. 60% were planning major tech investments last year.
Things like POS upgrades, maybe automation.
Exactly. POS, automation, self-ordering kiosks. Some sources even say those kiosks can boost the average check size by maybe 8 to 15%.
That's significant, a real return.
Yeah.
But whether it's tech or, say, a big renovation or expanding takeout, none of that is cheap.
No, definitely not. Needs real capital. And this is where the sources really point out a problem. Traditional banks, often just too slow for how fast restaurants need to move.
Weeks, months even for approval.
Yeah, and that just doesn't work if you've got an urgent repair or a sudden opportunity.
So that brings us to alternative commercial finance. The sources seem to really emphasize its role here.
They do. And it's not just about speed, though. Getting funds in, say, 24 to 72 hours via a simpler online process is huge. It's also how they look at your business.
Focusing more on cash flow, like the actual money coming in and going out.
Precisely. Your cash flow history, that pattern, rather than just fixating on a perfect credit score or demanding massive collateral right away, that makes way more sense for a restaurant with, daily sales fluctuations.
That speed and that understanding of the business model seem critical, like for covering unexpected repairs, bridging slow seasons, maybe grabbing inventory on sale.
Absolutely vital. Or just having that buffer for day-to-day operations. It provides that crucial agility.
Okay, so let's tie these needs to the specific solutions the sources mention. If you need that flexible money for everyday costs, maybe a short-term dip.
The sources suggest a business line of credit is often the best fit there. You draw funds when you need them, pay interest only on what you use, gives you that real flexibility.
And for the bigger plan stuff, like that kitchen automation we mentioned, or dining room refresh.
Yeah, for those larger projects, a term loan usually makes more sense. You get a lump sum upfront, predictable payments over time. Good for those significant one-off investments.
Got it. And what about buying specific things like new ovens, better fridges, those POS systems?
That's where equipment financing comes in. It's specifically for buying assets, and often the equipment itself acts as the collateral, so it can be easier to get, and it doesn't tie up your working capital.
Okay, so pulling this all together. Running a restaurant successfully today really means juggling these rising costs, the staffing headaches, and this constant need to invest and adapt.
Right. And getting the right kind of funding quickly and flexibly, it's not optional anymore. It's essential. And these alternative finance options, they're highlighted as, lifelines for many, whether it's for cash flow, using a credit line for ups and downs, or funding that necessary equipment.
And it sounds like finding a provider who really gets the restaurant business, its speed and specific needs, is pretty important. Our sources actually pointed to Commercial Capital Connect as one provider known for understanding these programs.
Yes, they did. And if these are challenges you're facing, looking for options for working capital, lines of credit, equipment financing, the sources specifically mentioned contacting Cheryl.
Cheryl at 1-800-798-4551. She's noted for her expertise with these programs just for restaurants.
That's the one, 1-800-798-4551.
So maybe something to think about as we wrap up. In a market this demanding, how could partnering with a financing expert who truly understands your specific operational hurdles actually shift things? Move you from just, surviving day to day to actually being able to invest and grow? That's a strategic thought worth considering.